Good morning, everyone. It is August 31st. It's Thursday. I look like hell. I don't know why. Geez. So it is the final day of the month, right? The final day of August, and we're running into September tomorrow, Friday, to cap out the week and close out the week. And we're also going to be closing out our live trading room that was open all week. And we also have our live training after the trading room all week. That is going to be done this coming Friday, so tomorrow. So I hope you guys enjoyed that. Come check it out. We're going to be doing that for the next 2 days. But some of the more important news, we don't have too much news today. We have just news out of the pre-market news that did come out, the PCE data. The PCE data was something that I was kind of looking forward to trading, but like it didn't really look like anything realistically. The PCE data is the inflation data that the Federal Reserve is mainly watching, right? It's their favorite gauge. And it came out, the PCE, the US core PCE price index year over year actual came out at 2.4%. The forecast was 4.2%. It came out at actual 4.2%. The forecast was 4.2%. The previous was 4.1%. So this is a little higher than last time, right? A little higher. It's in line with expectations, right? And then we have the US the US PC price index year over year actual came out at 3.3%. The forecast was 3.3%. The previous was 3.3%. So a slight increase there as well, right? So inflation creeping up a slight bit in the PCE gauge. And then we had the index month over month, the actual 0.2%. The forecast 0.2, and the previous 0.2. So some little creep ups in that. We got a little pop in the market, right? Before that data came out, and we're kind of pulling back right now. This could be one of the markers for a potential pullback on the day after we've had multiple days of green in the S&P 500 and the general market. So we also had some other news out here. Pre-market, we had the initial jobless claims. The actual was 228,000. The forecast was 235,000. Previous was 230,000. So decrease in the jobless claims is necessarily bullish for the labor market. The rates, right? The target rate for September. Remember, we talked about this earlier, and there was before about a 90% chance that we're going to stay consistent with the rates that we have. Right now, it's dropped very insignificantly from that level, 88.5% compared to the 90% before that we keep target rates as is in September. The meeting September 20th, so towards the end of the month. There's only an 11.5% chance of the move coming into a 25 BIP rate hike. So we still have inflation data to come out before that, like CPI and whatnot. We still have the non-farm payrolls to come out before that. So we do have some data that is going to come out before this event. So these probabilities can change. Will they change drastically? I don't necessarily think so realistically. So it is something to watch and to consider. In terms of just general news today, there's not really much, right? It was just the inflation data that crept up slightly, which is putting some downward pressure on this market. Nothing crazy, but the way I see it is the S&P and tech and everything has rallied really significantly over the last few days, especially I believe it was on Tuesday when we had that massive larger rally. So we're coming into a few key points of resistance, which I wouldn't necessarily deem as just random levels. I think that they're fairly strong, and price is going to try to respect them. Right now on the S&P 500 at 45.40 to 42, there's a very key area that held out before, a very strong order flow level as well. And we're pulling back about 10 handles from that level to the downside. So this is the overnight move. And we have a key level that sits in and around this like mid 30, right? 30 to 32. That's actually getting accepted to the downside now. And then we have levels down at 45, 24-ish, right? In that region. And the way I see it is today, Thursday, we didn't necessarily get the craziest of news, the best of news from the inflation data. We can't have one of those pullback days where we start the oscillations. And we're coming into non-farm payrolls tomorrow morning pre-market, which is going to be one of the more important events, I believe. It's usually a little more important, and that's going to give us a little more indication of where the next immediate move is. Keep in mind, we're also running into the long weekend. The long weekend means markets are closed on Monday. So next week is a short market week, meaning that generally speaking, markets like to run to the upside into those long weekends. And then after that, we can see what happens. I think there's still some more upside movement, generally speaking, for the next few weeks until the middle of September. Then we can readjust our thinking. But the way that it stands right now, what I'm looking at is that we could have a smaller pullback day. I think most of these dips get bought into tomorrow and maybe into the end of the day tomorrow. One of the only things that can actually ruin that is going to be the non-farm payroll data that comes out. So today I'm watching, we have the top of the distribution block between 45.55 and 45.60. The bottom of the distribution block as it stands, we sit around 44.83-ish. So very, very wide distance there, nearly 100 points. And I would like to see for the bulls, right, in the bull scenario, we have a very key order flow pivot that sits at 45.15 from yesterday's trading session. Anything that starts moving below that, right, we start getting a little more weary on the bull side. And I think a lot of these bears do take over. So I'll be watching to see if they start selling into that like low 30 again. But I'd like to see buyers stepping in around the 15s. And then we'll see how that kind of goes. We'll navigate this in our live trading room that we're going to open in just a bit today on Zoom. Again, it's open. Everyone is welcome. And we're going to be trading the S&P 500 mainly. So let's see how these futures play out today. I wouldn't be surprised to see some kind of pullback on the session. These guys they're getting a little exhausted here. And if they don't start buying at the early points of the session, I think that this pullback can be initiated. And then it's up to news tomorrow to kind of give us a little more indication of where we can go. But I think there's still some run up to be had, especially into the long weekend and into the middle of September, where seasonality tells us that there should be a little more bullishness in this market, just a bit more before we start looking for some sell-offs. So I hope everyone enjoyed that, has a great trading day, has a great rest of your day. If you're off for the weekend, because again, it is a long weekend coming up, enjoy the long weekend, and we'll see you guys tomorrow to wrap up the week and enjoy. Thank you and take care, everyone.